Well, I want to give you the lowdown on exactly what really is happening with gold and the commodities because you haven't been experiencing any inflation as far as the consumer price index or the commodities themselves. Now, what has been going on is asset price inflation. Now, not asset price inflation, whereas you're seeing that in the commodities, because none of this inflation is actually getting to where the consumer is. It's also, I'm going to say this. I think that gold is deliberately being kept down in price because central banks are still accumulating gold. China's accumulating gold. Also, J.P. Morgan has a larger position in silver than they ever had by many times over. But there is asset price inflation going on. Now, it almost looks like the economy is broken except for the BS numbers that are being published by the Bureau of Labor Management, the payroll numbers. Also, you're looking at what's going on in the stock markets. Stock markets aren't really doing that bad. I mean, they came down somewhat, but we haven't seen a major crash yet, real crash. They came down somewhat, but nothing really that significant yet. So, but other signs actually point to that the economy is broken. One being that the retail sector has been going down, actually not even since 2008, but also since 2000, the retail sector. Now, I personally think that the United States can actually still fare well if people are thinking outside the box, going to cottage industry, working for themselves, working as entrepreneurs, skipping working for these big businesses. As tough as that may sound, you're better off working for yourself. And it's really true productivity that keeps things going, not the numbers so much. But why do we actually show, why do I actually say that we show asset price inflation? It's not something that the consumer is seeing because the economy itself is lousy. I said about the Baltic Dry Index is the lowest it's ever been. And also the fact that oil prices are so depressed, that shows that there's not a large demand on energy, which means that there's not a large demand on, there's not a lot of manufacturing and production going on. But asset prices are being inflated. A lot of these asset prices are, well, what they are is the equities. The equities. As a matter of fact, the equities in other words, stocks have been within less than 3% of the GDP and change, growth usually, change, and inflation. So if you had a GDP of increase of 2% and you had an inflation of 2%, then the stock increase should be about 4% plus or minus 1%. So it could either, the general equity should go up between 1% and 7%. But what has happened since 2008, 2009 was the absolute bottom, March 20, 2009 for the equities. What has happened since that time? Everything's doubled, more than doubled. I know they came down a little bit, but they haven't hit down to 9,000 yet. I mean, that would be a crash there. But what's going on? You see, what's going on is actually the central banks and the too bigs to fail are investing in assets. That's what's keeping the prices up. One of the biggest questions is, how is the Federal Reserve and other central banks how are they going to unwind their balance sheets? See, their balance sheets have increased drastically over the last several years. And this is actually what it's caused is there's been QE going on. Yeah, I know the QE stopped, but really there's QE going on after we saw, an implosion in the price of silver and the commodities. But what's been going on is the QE has been stimulating the equities. It's also been stimulating other high ticket asset items that are like investment in land. Like even Donald Trump, like his land is in commercial real estate. Commercial real estate has actually been doing very well in some areas of major cities. On the books, his values are one thing. On actual reality and the market value, they're much higher. Classic cars have been going up a lot. Actually, what I expect is when these asset prices unravel, you're going to see things like classic cars go down in value quite a bit. I mean, there's always been ups and downs in these things. Actually, some of the elite or some of the people that are invested in these assets like artwork, classic cars, some of the real estate, it's going to drop drastically in value because they really don't have anybody to sell to. I mean, they're not going to sell to the middle class or the poorer classes in America. They sell between each other. And, there is a number of loopholes they can do on asset swaps. I know you can do like-time exchanges on real estate, but I've also seen people, and I'm not talking about red, but also know about people from before when I was more active in this, where they would use an asset swap like on a Greek island for some other asset, even unlike asset exchanges. They're a specialist in this, and it's ludicrous to think that the rich will pay their fair share when you have an IRS, because they just really need to abolish the IRS and put a consumption tax in place, because that would eliminate all this bullshit, because they're always going to get away with loopholes. Because people that are professionals actually live to find these loopholes. It's like a game. And there's way more of them than there is. I mean, it's just a bunch of... It's a separate subject, but that is something where by the wealthy are actually always going to get by not paying their fair share of taxes. It's always been that way. Because we have an income tax law. We just need to have a consumption tax. That's a separate subject, but I just figured I'd mention it here because, what's going on, where all the stimulus money went into. It's basically into assets. Assets, the type of assets that the investments banks invest in, the central banks investment, the ultra wealthy invest in, which will be prime real estate, mansions. Some of the real estate in some sectors is doing astronomically good. Now, actually, even BlackRock is one of the largest real estate holders in the United States. Now they're using it for rental properties. They're renting it back to everybody else. It could be classic, somewhat classic cars. But, I showed a Mustang convertible there in 1970. But the kind of classic cars these guys invest in are astronomically higher in value than that. And, it's in reality, the situation is, though, a lot of these people that are elitists that are investing in these assets are making poor choices, which I don't really care, which is fine, because they're probably going to get stuck with holding the bag for quite a time. But the thing is, with the people that have a lot of money, they do not, if they get, in other words, you as a consumer, if you get an extra few $100 in your paycheck, you'll spend it on, food, clothing, fun, or materials or something, or products in your house, and that'll actually go into the economy. And that'll increase consumer price index. It'll increase the consumer price across the board. With the people that have tens of millions of dollars or hundreds of millions of dollars or even millions of dollars, when they have more money, they don't go out and buy a bunch of little stuff at the retail stores, because they already have that. They don't know what to do with it, and what they do is they invest in assets, large assets. And that's really where the inflation has occurred, because all the stimulus money from the Fed has been channeled into the too bigs to fail, the central banks, the investment houses, and the elite. But in reality, and you're not going to hear any sympathy from me from them on this, because I think their assets are on a downhill slope now. We're starting to see some of the problems in the equities markets, in the bond markets. And there's other experts out there, I won't mention any names, but some people that have called the implosion in the real estate market have stated that the whole global monetary system is basically broken, because we're going to negative interest rates. Negative interest rates are going to be everywhere. It's going to discourage reinvestment, capital expenditure. I mean, it's ridiculous. I mean, who? I mean, it's supposed to encourage spending, but actually, what it does, because when you have negative interest rates, it's supposed to actually encourage spending, because you want to keep the money in the bank with negative interest rates. But really, what it does is it causes people not to hold cash in the banks, and it causes people not to do anything. Because the banks actually aren't lending; they're just trying to push in negative interest rates. They're killing the economy all the way around. That's why actually I say probably the answer to the whole economic way out is not the talking heads or the ones that are trying to finagle with the numbers. It's cottage industry and just doing things on your own as much as possible. But my point on this video is there has been major inflation. It's just that it's in assets, not in a consumer price index. The reason it went into assets is because the money that was stimulus went into the too bigs to fail. They do not go out and take more trips with their car. If they got more money, they don't go on a little vacation someplace. They don't do extra things like that. They don't go buy an extra upgraded stereo or some entertainment system. They don't buy they already got all this stuff. They got all that. That's like minor chump change to them. What they do with that money is they try to invest it in safe haven areas, and they go for artwork, classic cars, classic motorcycles maybe, homes that are high-end homes, prime real estate, that type of stuff. And those type of assets have went up tremendously. Not just real estate, prime real estate, type of stuff that Donald Trump has invested in, actually. That's why he's been doing so well. Like on the books, he might have his stuff at cost, but the market value is way the hell above that but it could change. It could change. Many times the best and the brightest that are in fields have gotten upside down on real estate, restaurants. They could be restaurateurs, or they could be people in the oil markets. They could be people in entertainment. Because when they've been on a real good running streak where they look like everything's going well. They got their castle built. Everything's going to be fine. They get to the point where they think they're smarter than they are. They're never going to make a mistake, and they don't see the changes coming up that are broad-based changes. So I think a lot of these major asset class categories where the elite are invested into they've already peaked out. The equities, the classic cars, the prime real estate, a lot of it has peaked out. And it's on the downswing. Don't hold your breath for it to crash right away, but, I think that when that's on the downswing, there's going to be, silver, gold, and the precious metals and the commodities will have their time. But unfortunately, when they have their time, we're going to probably be seeing extremely high oil prices and things like that at the same time. But, the inflation has occurred. That's really what my point is. The inflation really has happened. It's like you just didn't see it in the consumer price index because none of it went to the consumer. They're not paying people more wages. As a matter of fact, to give you a good example, the productivity has gone up, yet the wages haven't gone up, and there's less people being hired. A prime example where it really got lopsided is productivity has not really decreased in the oil industry in the United States, but layoffs and oil rig closings have went down like crazy. So they're getting way more productivity out of less people. And it's the same thing in the mining industry, too. So you had to have consumer price index inflation. The money has to get into the wages. And of course, don't expect Hillary to put the money in the wages. God, that lady will not do that. I mean, you could say anything you want when you're trying to be. Well, I think my audience knows that. But you could say anything you want when you're being elected. But when the reality comes to the situation, boy, that sure isn't going to happen. She's another one of the too bigs to fail elitists. But Yeah, we'll see what happens with that deal because I really think that eventually there's going to be a major backlash from her supporters against her. Um, you know, but you know what could possibly happen even with a lot of things where, well, I hate to say it, but I think that the Deagle.com predictions from that military site, Deagle.com, about the United States experiencing a rapid decrease in GDP over the next 10 years, a rapid decrease. In other words, the Deagle.com site is actually predicting the population to go from 313 million to 64.9 million by 2025 over the next 10 years, with the GDP going to 1/10 and the military expenditures going to 1/10 of its present level. I can't imagine that in no way in hell. But, I really don't know. I think it could be partly true because I could not imagine the tech boom being a bust as much as it did when the internet was brand new. I could not imagine the real estate market coming down as drastically as it did. It started to in 2007. I figured it would come down, but not like to where you couldn't build something for, like they're selling something for half of what it could be built for, even less than that. I just couldn't figure it would be coming down that far. And I'm assuming, like when it happened in 1929 or actually 1932, even more so, that people would think that the markets can come down that much. But it's possible that these things could happen. So I think that we're basically running on a tightrope, and it's like a situation whereby people are just going to have to tighten their belts in the United States all the way. And it's going to be the only way to manage money is to spend on what you need versus what you want. Now, I can tell you one thing, most people spend on what they want. If you look at Facebook, you'll see people out there trying to brag on how many vacations they went on and what they bought, and they upgraded their house, remodeled their house again, and they bought a new car. They did this to their landscaping, and they went here and they went there. It's all unnecessary garbage. And a lot of these people are, maxed out on their credit cards just trying to freaking look like they're special. So, until that ends, and it's none of this stuff is going to get straightened out. And a lot of times when these people are maxed out on their credit cards, the other side of the equation is that the bank shows that as an asset, and the bank might be having bad assets there too, which is really what happened back in 2008, 2009 with the housing market. But now it's with the personal debt, the personal debt. There's a lot of personal debt on credit cards. So, the elite are, like I said again, the inflation did happen. It did happen in certain asset classes. It didn't happen in commodities because commodities is really related to consumption. It happened in like large asset inflation occurred in prime real estate, especially prime commercial real estate, like stuff like Trump owns. It happened in classic cars, even in artwork. Not the '70 Mustang I was showing there, but I think that even these people even the wealthy are going to get upside down with this type of stuff because their market is themselves. It's almost like the silver people get sometimes stupid too. I mean, right now silver is a better buy than it was ever. It wasn't even a bad buy when it was in the mid 20s because it went down half. I even figured it wasn't bad there. I didn't realize it was going to go down to here, but then again, when something dropped, I wasn't telling anybody to go buy the stuff like mad after 30 or 40. I wasn't one of those. There was a lot of them out there saying to do that, and I never said to buy all of it. Like I said, you put some of your money in it, and that's it. Because I'm not Karnak the magician. I just know the serious, proven things that have been worked. That commodities are a high risk, high reward asset, and you have to have patience with. But as far as, what's going to happen with the major asset classes that the wealthy are invested in, I think they're going to come down a lot. And because they have nowhere to trade except between themselves. Now, one of the things that, and you know what these people are doing too? They're buying more and more of the same kind of crap because they don't know what to do with their money. And I think that's going to be one of the main, like they're buying more high-end real estate. They're buying, like, Trump is all lopsided. And, I'm not going to feel sorry for him, but, I don't even want to pick on him. I don't think the guy's, I don't know, I'm not sure. I got my theories I got some conspiracy theories about Trump, but I'm not going to knock him because I like what he says, okay? So I'm in that camp. But I got some conspiracy theories about him. But, he's a guy that's always buying into one area, too. I mean, he's not diversified. It's just like oil companies, people have made a lot of money on fracking, like Harold Helm. Yeah, he's lopsided now because the oil industry looks bad. There's going to be major problems even in some of the largest oil companies now next year if the oil prices stay low. Which probably helps the classic cars a little bit because they're gas guzzlers, But the thing is that, say for instance silver starts going up. Well, I expect the silver people are going to make the same dumb mistakes that a lot of people make that are the most wealthy. What they're going to do is, the silver went up to, say they bought silver at 14. Oh, it went up to 20. I made a lot of money. Then it went back down to 17. They'll rebuy silver. And they'll try to keep flipping it back and forth. And they're going to wind up getting hold in the bag. Just like the real estate people did, just like the tech people did, and even like the shale oil fracking industry have done. They're going to wind up getting hold in the bag that way. Me, I'm going to be in different things. I'll probably, I don't know what I invest in. Probably some land and keep it simple, cheap, low overhead, that type of stuff. Maybe some technological type things that, I don't know. I'm not sure. But I do know that keeping money in the bank is not safe anymore due to like negative interest rates. And I think that the more that government regulations are out there and all these dumb rules that are coming out where they can just freeze your accounts and stuff, I think it's not smart to keep money in the bank. But that does not necessarily mean you want to keep silver. You would want to keep like stored food. You want to have solar. You would probably want to invest in solar panels. I know Bedini's coming out with some type of special battery chargers for solar panels next year. That might be a good investment. Whereby one of the problems with solar energy is that the batteries wear out so fast. Maybe a classic car or something or motorcycle. I don't know. Maybe that would be smart. I don't know, but I would not go too much into one area. And I would try to stick with things that you can use that you can get by with without no money. That is important. If you got, the essentials, like in other words, like the wealthy don't do this a lot of times. They are stupid. They don't, to me, best things to invest in are like food, fuel, firepower, things like that, whereby you can exist if there was no money. Because I think at one point in time, we may even have a situation, and this is really like a little bit of a conspiracy. I'll just have to digress on this a little bit. I've been talking about in some of my videos about an upcoming mini ice age. I think that is a very solid thing. What is also going to occur at the same time of that is a lot more cosmic radiation and solar flares hitting the Earth and a lowering of the magnetosphere, which protects us from a lot of these problems. In other words, during the last mini ice age, we had the Carrington event of 1879. It fried telegraphs. If that happened today, goodbye all your electronic accounts, goodbye the utility grids and everything else. So Screw everything up. I don't want to put that out here like, it's definitely going to happen, but, they're not prepared for it. So, I like to kind of like spreading out my eggs in different baskets. And I always was an advocate. I always said, don't put all your eggs in the silver. And like people were going, what do you do? Put it in fiat. I says, there's a lot of stuff you can do. I mean, actually, I even have like over a year's worth of that freeze-dried food with the cans. That's like 30-year food. Loads of stuff like that. Generators and, I mean, fine. I mean, and I'm not going to invest in some damn real estate in the middle of the city for commercial properties. No way in hell. Be out there in the Smoky Mountains or the Blue Ridge Mountains of Tennessee, Kentucky, or North Carolina with a log cabin with pressure-treated wood. I'm not going to mess around. So, it's like I'm not playing a game that the wealthy are in their way because I really think the wealthy are freaking stupid in a lot of ways. They outsmart themselves. But, they are actually outsmarting themselves since they poured all this money into these asset classes, who the hell are they going to sell to? Say they invested in Greek islands. Say they invested, who are they going to sell to? They could sell to one of their own kind. They're not going to sell to the middle class. They're not going to sell to this lady changing the tire on a motorcycle. They're not going to sell to her. I mean, if they got a high-end, Bugattis, cars and stuff, and Rolls Royces, and, Excaliburs, and whatever the hell else they have out there, they have all these Van Gogh paintings. Who the hell are you going to sell to? Yeah, they're going up in value. You can find out Haggerty's is a bunch of bullshit. The classic car show and all that kind of crap, and all the other stuff that's out there. It's a pile of bullshit. These values are going to go they're going to come down. That's actually where all the inflation actually has occurred. And it's something you don't see as a consumer, which is good because, if the silver was going up a lot, we'd probably be having rampant inflation because that's been the whole theory. It wasn't necessarily a get-rich scheme. It could be, though, if you catch it just right. That's how commodities are. But silver was supposed to be, if we have rampant consumer inflation, which you mean oil prices, energy prices are up, you're going to see silver and gold prices up. And it's the only way to save your ass. But if you start thinking about it, some of the best hard assets out there are like some of the simple stuff like tools, firepower, things you can grow, things anything like that. I mean, you're in some ways, what I'd recommend somebody buying silver now over maybe an Alaskan chainsaw mill or something, depending on where you are. If you're in an area that has a lot of trees and you can cut down all these trees and make lumber out of them, I'd say probably the better investment would be the Alaska chainsaw mill. Provided you can make use of it right now. I plan to probably get one. I will get one of those when I need to get one of them. Not right now. Otherwise, you'd just be collecting dust. But that's the type of stuff I'll be investing in. And probably some serious acreage in Smoky Mountains or something. But then again, maybe not that serious of acreage because you got to pay tax on it. That's one of the problems, too. That's one of the problems. So, anyway, I just want to bring out this and highlight why, we haven't seen consumer price inflation, but there is serious inflation going on. And one of the big questions is, how is the Federal Reserve and all these central banks and these too bigs to fail investment houses and all these wealthy people, how are they going to, they've been watching their assets going up in value, like artwork, classic cars, prime real estate, mansions. Who are they going to sell them to? How are they going to unwind those balance sheets of all that crap they got on there? They can't. They can't. They got this sinking feeling because they can't sell it to us. We're not going to buy that. Well, they could sell it to me for like pennies on a dollar. If they want to unload that 70 Mustang convertible or preferably a 50 Ford, actually. I wouldn't even go for a 70. Yeah, I would buy it for half or a fraction of what it is today. That's what I would do. I mean, I wouldn't buy it for what the hell they bought, paid for it. No way in hell. And, that's just the way the situation is going to be. So we have had serious inflation. You haven't seen it. It's not consumer price inflation. It's major ticket prime asset investment class inflation that the too bigs to fail, the central banks invest into, the investment houses, the ultra wealthy invest into. That's where the inflation has been, and it has gone way the hell up. Again, I want to give that example that typically, and I'm going back all the way, I mean, way over 100 years, the stock market stays within 3% of the inflation plus the GDP growth. So if there's inflation of 2% and GDP growth of 2%, that would give you 4%. And so if it gets on the outside plus side of that, that would be within 3% of 4%. That would be 7% growth in the equities. Well, the equities have grown by more than double since the bottom in March 2009. That's your inflation right there. And, I keep thinking it's going to crash. I mean, I should have crashed a while ago. The PE ratios suck. But it probably will. Probably will. I think Fed policy is trying to keep it going. But then they raised the interest rates just a titch. And, the major media is even saying that's a mistake. So be patient on this stuff, and like I said, don't put all your eggs in one basket. So, I think silver is going to exceed the $50 an ounce at one point in time, no problem. And when it does, I'm not going to go all into land or something. I'm not going to go into one thing. And people will be screaming at me, "What are you going to take fiat? The dollar's going to be worth nothing." You know what? If the freaking land went down to like a fraction of what it was, and I already see land values drop in half in some places. In not the type of places I'm talking about the wealthy are investing into. There's different types of real estate. The type of real estate that are going up a lot, the wealthy are investing into, and like those are like China land properties that Trump owns, but a lot of real estate that is out in areas that have been new developments that never took off back in 2007. That land is dirt cheap, and it's still going down. I'm talking about, when I said there's inflation in certain assets like real estate, not real estate across the board, the type that the wealthy are investing into, and also companies are investing into, like BlackRock, which is the largest real estate holder in the world. So anyway, stay strong. I've been long on this because I go long on these things because I want people to understand what's going on with this stuff. It's like I can't predict the future, obviously. I don't know the future. I have an inkling of what generally is going to definitely happen. Like, not exactly when, but I do have an inkling of what's generally going to happen. And also, the elite will not fail because these guys they see what I see. And they might not see it maybe as quick, but they'll pick up on it and they'll adjust accordingly. And they have a way of being like a cat that just lands on all 4 feet, no matter which way they get thrown and tossed up in the air, and they come back because these people are workaholics. So don't expect them to just totally go under. Some will, but most of them won't, because it's just their nature that they will work their way out of the situation. You worry more about yourself and what's going to happen. And, it's like, even though silver probably is a tremendously good investment right now, I still would not go all into silver, because that's like a cardinal rule not to get too lopsided on one thing. It's dangerous to do that. There is also other problems with it, because if it goes up exponentially, I don't know what the government policy is going to be on taxation of silver too. That's another thing to think about. So, even though it went up exponentially, say it did, would the government institute a confiscatory tax on silver? Maybe. Why not? As a matter of fact, I'll go along on this because I have a lot of experience in these types of things. Because I'm accounting, finance. I've been doing this shit a long time. And I've heard a lot of things, and I'm very astute, and I've been around the boutique investment house and the firm and construction accounting and large major projects, and been around a lot of stuff. They did do when oil went up exponentially in the 70s during the time the precious metals were going up. They actually instituted a special excise tax on oil. So, that's what I'm saying. I mean, you don't know every contingency that could be out there. That's why it's never good to go all into one thing. That's not my strategy. I can tell you that right now because I'd rather be pretty well diversified. But I think silver is an outstanding investment, and it's one of the investments that has been ignored by the elite, except for maybe J.P. Morgan. But, what I think's going on is, like I said, they're accumulating. China's accumulating. Russia's accumulating. The U.S. is probably accumulating, but it's not like us, the common people, are accumulating. They're accumulating precious metals and gold and silver. But they're keeping the prices down as low as possible. So they're getting the metals as cheap as possible. The miners that actually do the work to extract the metals are working their butts off on skeleton crews. If the mines go under, the elite actually buy up the mines. If the oil wells go under, the oil rigs go under, the elite buy them up. And then they'll see them go way the hell up. The prices go up way high again. And then they'll probably sell off those ventures later when they're worth 10, 20 times as much as what they paid for them. That's how they make their money. I mean, don't expect them to go down. But I think some of them are going to get caught holding the bag, and too bad. I don't give a shit because the way I look at it, a lot of people who are invested in silver feel like they're holding the bag. Now, one of the things I can tell you where I always felt very confident, I know I've been really long in this video, is that I invested almost as much in palladium as I did in silver, and I'm still up well over 2.5 times. Actually, 3 times almost. Even with this backtracking. But everybody in the world told me that was a stupid thing to do. So, anyway, and I expect, and I have been saying, I expect palladium to be worth more than the price of gold, and I expect gold to be worth more than $2,000 an ounce. So, I mean, I don't know this, but that's what I expect. And I got the patience to wait it out.